announced it at very short notice because we didn't want to miss out the opportunity of having Moneylife members being able to meet our new trustees. So I don't think anybody on the stage today needs any introduction. So I'm going to keep it really short because we will try and increase the time that we have for direct interaction. We wanted our trustees to meet our members. We also wanted issues that the foundation has been grappling with for the last 5 years to be known to our new trustees. So we are delighted to have here today Mr. TS Krishnamurthy, who is the former Chief Election Commissioner of India. Now everybody remembers him as the former Chief Election Commissioner, but I know him as a path-breaking Secretary of the Ministry of Corporate Affairs. He is the person who, with the amendment to the Companies Act, created the Investor Education and Protection Fund and has done marvelous pro-investor work at that time. And we have, I'm going by the order of people here, Mr. Siddharth Das, who is with Flipkart, and he brings in a completely new dimension to what Moneylife has been doing. We think the future is going to be all about electronic payments and systems, and at Moneylife we know that we don't know enough about the world that he lives in, and we've seen what's been happening, all the billion-dollar sales and things, and this is an area that is completely new to us, and we hope that we are going to be able to build our strengths by having someone like him at the trust and answer all the questions that all of us first we have and then all you members have about how this whole market works. And we are of course most privileged to have Dr. KC Chakrabarty. He has been the Deputy Governor of the Reserve Bank of India. He has been a great friend of Moneylife through all these 5 years. We've had lots of arguments with him because he likes to provoke us all the time to start arguing, and he will never tell us his mind about what he thinks on an issue. And I was pleasantly surprised once when I got invited to a meeting with Banking Ombudsman. Whenever I met him, he would argue in favor of the banks, and I would get very rattled and keep arguing back. And then I attend this meeting with the Banking Ombudsman, and he was, as though he was part of Moneylife Foundation, arguing a completely different line with the bankers. And obviously we know where his heart lies, otherwise he would not have been here today and accepting our invitation to be on the board of Moneylife Foundation. And it is indeed a great privilege to have Mr. Sanjay Nirupam here. I don't know how many of you remember, I'm sure some of you have been there, Mr. Kinney and others. He is the one who inaugurated Moneylife Foundation. And like I said, we work well with the opposition. So I think he's very smart. He's here today to get a lot of points with which he can, raise issues with the government. So let's give him a lot that he can take back, because we are not going to make any change happen unless the opposition is strong. And let's not all be rah-rah about the new government. We have been quite happy about the government that we have. But if it has to be on its toes, then it needs somebody to question it. And the people who are going to question it is us at Moneylife Foundation and people like Mr. Nirupam in the opposition. Right? So with this wonderful panel and no further intervention from me, I think we will open it up for public discussion. Does Devashish want to start it? Privilege of starting, set the ball rolling. But otherwise it's on to you. One request, please try and keep one question at a time. We will avoid follow-ups unless absolutely necessary so that a large number of issues get raised. Thank you so much.
My question is very simple. India is probably the only country which allows a builder, a jeweler, and just about anybody who can, a manufacturing company, to raise money directly from the public through different kinds of deposits. Most of these are unsecured. Is this desirable? Has RBI thought about changing this? Was this debated in Ministry of Corporate Affairs? Because this, for instance, now the ministry has told that the jewelers which are corporate form will not be able to do it. So Titan has to close. But there are a lot of small jewelers who can still do it. So why don't we have a holistic sort of deposit taking policy where the banks can do, NBFCs can do, registered organizations can do? Was there any thinking in RBI? Was there any thinking in Ministry of Corporate Affairs?
Who will reply? Whom are you asking?
I'm asking you first.
You see, look, it is a very relevant issue. First thing, we have not defined what is deposit is. we must define deposit. Globally, regulation is activity-wise. In our country, regulation is institution-wise. RBI regulates the bank, company affairs they regulate the company deposits. If somebody else is regulating, the SEBI is regulating some other type of things. Now what is happening, we neither have defined deposit nor our regulation is activity-wise. Ideally, globally, deposit taking should be a regulating activity and deposit taking must be regulated by the same principles. Unless you bring that, and I have raised in the Reserve Bank, you move away from institution-wise regulation to activity-wise regulation, so that whether NBFC accept the deposit, whether the company affairs accept the deposit, whether the builder accept the deposit, whether the jeweler accept the deposit, so long as they will accept the deposit, they must be regulated by the same standard the way the bank accepts the deposit, or you don't allow them to raise the deposit. That's the thing. It has a long way to go. That the problem is this: activity-wise regulation is not there, deposit we have not defined. And that's why all these problems, SEBI will control, he is not in my area, he is under the area, who will follow it up, all this business. So this is more food for thought to Mr. Nirupam. That's what I say, that this requires change. That's not.
I'm here to understand the issue.
The matter of ATMs, the Reserve Bank has come out with two circulars. Now, the Madras High Court has issued notices to IBA and the Reserve Bank, saying that the Reserve Bank has issued based on representation from approved banks and not without considering the benefits to the public at large. Now, what is your stand on this?
You see, first thing, I am no longer in Reserve Bank.
Not in Moneylife.
No, I am no longer in Reserve Bank. Yeah. So, my view is not the Reserve Bank view.
No.
So far as charging somebody for withdrawing the money, it is illegal, it does not happen anywhere in the world. So I don't accept, so long as I am not giving a secret, I was in the Reserve Bank, I did not allow that thing to happen. So that's why it is an issue. But you see, look, my only point is that court has given the notice, the matter is sub judice, so we cannot comment also on that. This is the issue. But globally, nobody for drawing the money from your own ATM you charge. Better than if you go to a bank branch, they should start charging. If that is the stand. Now this is what is that I was telling to Devashish and Sucheta madam that we must create a public opinion and create a PIA. And you see, but on the proper line. And there are certain, you see, I say that we have to put that, because this is a totally wrong step. That's not only I will say. So beyond that, I can't comment on that. What is the Reserve Bank view that Reserve Bank should give? But I don't agree with the institutional view of Reserve Bank of India.
Dr. Chakrabarty, there's a discussion on Twitter where some people were tweeting that in America and some European banks apparently are charging customers even to keep their money in a bank. I don't know whether it was facetious, but some people say it is true.
Yes,
is that happening?
No, you see, look, why? If the interest rates is negative, banks will charge for keeping the money. Because you see, by keeping the money, I am not gaining anything.
Okay.
So there is a transaction cost and you have to pay that. Only when the interest rates are positive, I am earning a margin. But interest rate is zero. In America, interest rate is 2.25. Then who will give? If you keep the money, I am not getting any income. But still I have a cost. I have to pay the salary. I have to pay the maintenance. So that's why I am charging. There is nothing wrong in that.
So if I have to argue this ATM issue, I will have to point out that here we get only 6% and it is below inflation.
You see, look, that we can discuss. Argument is very clear. Then let the bank charge on transaction basis. But then interest earned and interest spread, that spread should become only 1%. You deposit interest rate, advance interest rate. It is not that on saving bank you will pay 5%, 4% interest. On advance you charge 12%. You charge 4% on saving bank, give the loan at 6% and charge on transaction basis. This has to be a rational system. That's only argument should be. That if they say that okay, many banks charge on transaction basis across the globe, but the interest rate is very, very low in those countries. So you should bring down the interest rate here also that low.
No, but in America you just said interest is
0.25%.
0.25%. And you see, this is the tragedy. Rich borrows at zero cost.
Rich people borrow at zero.
This is the tragedy. And poor saves.
Prabhu, you are a person.
Dr. Chakrabarty, sir.
But you see, then I should have interaction with all you people. I feel a little bit embarrassed. You see, that's the thing.
Okay.
No problem. I'm not saying no problem. That's the thing.
And the sequel to the issue on ATMs, my experience has been that a number of times we find ATMs not working. It's not functional. There's a board kept out of order. Now, if ATMs are to be treated as mini branches functionally, a customer can deposit cash, withdraw cash, deposit checks, and so on. Should there be a kind of penalty for the bank? It's akin to keeping a branch closed. So if the ATM is not functional, and if it happens very regularly, putting the customers in a hardship, because one has to travel to a distance to go to ATM. So how do we accept that from the consumer point of view? So
you open a bank and pay the penalty if your ATM does not give the money. I have no problem in that. Look, any penalty charge, it is a contract between the two people. If the contract writes that if you don't get the money from the ATM, I will pay you the penalty, no problem. But this is what when you open an account and take an ATM card, you must insert this clause and make the movement. But if you don't have inserted that clause legally, let's say howsoever you may be morally asking for that. Look, I have asked a very simple question. Suppose you have a check and you don't have sufficient balance in your account and the check goes to the bank and it is bounced. Is there any penalty you are asking? Bank is asking you some penalty. You know what is this penalty? These countries it varies from 50 rupees to 1000 rupees. And each bank, because you see one thing, banking regulator does not prescribe any service charge. It is stopped from 1999. We have again not made any study. After that, how the service charges have been increased. That's the thing. That is the liberalization when it is not warranted. That's okay. Now, against that I am giving a counterpoint. Suppose you have a balance and anyhow your check has not been honored. Now what bank gives you?
You fight for an apology letter.
Only an apology letter.
That too after fighting.
Now why this should be different? We have never raised this issue.
We raised it all the time with RBI.
In any case,
No, this has to be raised in the court.
no. In any case, the check presenter is penalized, not the person who's bounced.
I am not concerned. Bouncing is that, issue is that.
But I have done no fault. I have presented a check. Why should I?
No. It is the fellow whose account is being penalized. It is not that. I'm sorry.
So both sides. Today they charge both sides.
You see, look, I am
Both
actually saying that question is that presenter has no role to play.
But
It
I am
is there.
charged.
But if it is wrong, it is charged, it is wrong. What I am saying, it is only the fellow who is writing the check, it is his fault. Presenter he has no knowledge. I have given you a check, I don't have a balance. On the contrary, if I am writing a check without a balance, section 138 can be invoked. That is what is the thing, minimum balance. You have written a check without balance, that is today the criminal offence. The charge part is very clear. If some other bank is charging, I think you people are too rich and you are ready to give the money. I have no problem in that. But again, that is the contract. You see, the issue is that you must read the contract. You see, bank you want to do, but issue is that this type of consumer activism is not still very active in our country, and that's why what is happening, these are bad in the law. Contract is valid, but certain contracts are not valid, which are bad in the law. Somebody has to challenge it and get a decision in the court and saying that it is bad in the law, automatically it will stop. Contract is not always, which is against the fundamental right of the people. Those contracts cannot be valid.
I want to raise a completely different issue with Mr. Krishnamurthy. I want to ask you for your suggestion and inputs on one issue which we get lots of complaints about, which is continuation of fixed deposits. Okay? At this point of time, while the economy is supposed to be booming, there are at least 20 to 30 companies which are not paying their fixed deposit holders. And this includes people like Yash Birla, where if you open Mumbai Mirror on page 3, you will see them opening new jewelry stores, but at least 5 of their companies are not paying. Now, the Ministry of Company Affairs over the last few years has done very fancy websites, and they say, go here, fill it. So, Moneylife under its Legal Resource Center tells people how to do it. We've got a round of replies now saying, okay, we've done it, goes into a black hole. So, I think we've discussed earlier, no accountability on the part of government. There are two issues that some people raise at different forums. One is that most countries do not allow companies to raise these kind of fixed deposits at all, because they are susceptible to maximum mis-selling, and every time it's people like senior citizens where they say you will get 1% more and 2% more, and they end up losing big chunks of their life savings. What is the line that Moneylife Foundation should take? How do we fight this, and how do we take it forward so that the government is made to do something?
In my personal opinion, there is no need for a separate provision in the company law for deposits. Actually, when I was secretary in the Department of Company Affairs, there was a big discussion between the Department of Economic Affairs, the Department of Banking, and the Company Affairs. The Reserve Bank took the stand that we cannot control these NBFCs or these other companies. It should be entrusted to another authority. Department of Banking also took the stand that Department of Company Affairs should take over the regulation of company deposits. I was telling the Finance Minister and then the bank governor that if you are going to apply the same yardstick which the banks are being asked to follow, most of these companies will fold up because the percentage of deposits allowed for companies is very high. So I said there is no need for our Companies Act to have a provision on company deposits. It should be regulated only by either Reserve Bank or a separate NBFC authority, but it should not be the company, because first of all, Company Affairs Department does not do any auditing of companies. It only does inspection on the basis of certain norms. But as far as company deposits which belong to the investors, I think a different standard has to be employed, and hence I personally feel the entire provision relating to deposits should be removed from the Companies Act, and it must come under some other statutory authority, either the Reserve Bank of India or any other authority to look after the deposits being received by the companies. And the Companies Affairs Department does not have any wherewithal to do an individual auditing of these companies which are receiving deposits. Hence, my suggestion is you must fight for deletion of these provisions, which is very common in the Western countries. They are not allowing companies to return deposits. I see no reason why we should have a separate provision in the Companies Act.
Sir, collective investment schemes used to be under the ministry, they went to SEBI. I noticed that you don't mention SEBI, and we find there are zero results there. Any particular reason?
No, as far as deposits are concerned, whether it is collective or otherwise, I feel there is a need for a separate regulatory authority, because even the Reserve Bank is not able to devote its time on this, and it is for the government to consider seriously whether they should have a separate regulatory authority about this collective investment schemes and the NBFCs. Because with the present institutional arrangement in the Reserve Bank, it is not adequate to deal with this issue. So it is for the government to consider whether they should have a separate authority to regulate all these NBFCs and the chit fund schemes or Ponzi schemes and so on. Unfortunately, this is an issue which has been ignored because big people are not involved in these things. Small people are involved in it. So in my opinion, it is necessary to fight out this system. And the present confusion about these various chit fund schemes or chit companies or this collective investment schemes, there is a need for some new thinking, at least on the part of the government. The present system is confusing and is inadequate.
I just was curious, did anybody suggest that manufacturing companies should not be allowed to raise deposits, unsecured deposits from the public?
I'm not saying that manufacturing companies should not raise deposits.
No, I was just asking, did anybody suggest it during those discussions? Just out of curiosity.
No, there was no such suggestion.
Sir, my question is, there are a number of cooperative banks, those who disburse huge amount of loan, and that huge amount of loans is because they are unable to recover it, the bank goes in loss. There are n number, all people may be knowing. So whenever we are dealing with the banks, such type of banks, about small issues, these banking people, they are saying that we are following RBI guidelines and controls and all. And this huge amount of money of pensioners, it got stuck. They are unable to get the hardcore money of their entire lifespan. So what is the control of the RBI and what is the remedy for?
Yeah. First thing is that there are two types of cooperative banks. One is the urban cooperative bank, one is the rural district cooperative bank, what you call three-tier structure, PACs, then the district central cooperative bank, then state cooperative bank. Now you may be astonished to know, majority of these rural cooperative banks, they are not even licensed.
Not even licensed?
They are not even licensed.
Those banks are governed by
BJP government has
No,
just given them
they are governed by
deposit.
Reserve Bank, but they are not licensed. And they have applied for license in 1966. Reserve Bank has not decided on that.
No, banking part is governed by RBI.
But if I have not given the license, I cannot regulate it. I am saying urban cooperative banks have a license, but they are not have a license. The urban cooperative bank, you see, look, all when you are putting the money, if the money you don't look into that, what is the nature of the bank, what are the other bank, you are going to suffer. So I only say that, and because these banks are there, cooperative is in a great mess for the last 100 years. It is a part what he was trying to say, dual regulation, half by state, half by that is the thing. My only thing that don't put the money in this bank. But for 0.5% interest, 1% interest more, if you keep the money in this bank, you are going to see, look, the basic literacy what I want, wherever return is high, risk is much higher. And we must learn that.
Yes.
You see, if in the market, potato is sold at 10 rupees a kilo, and if somebody is saying, I sell the potato 2 rupees a kilo, 2 rupees a kilo, you don't even look at that shop, because you know this is rotten potato. In a similar way, if the market somebody is giving this price, if somebody is giving a higher price, that means he is trying to cheat you. But if you want to put your money, tear off your money and put in the fire, you have to be blamed yourself then. Beyond that, there is nothing you can
And
do.
sir, I think we should mention Moneylife itself.
I would like to add how they are. I would like to add one more thing. The attraction to cooperative banks is that they need not deduct tax at source. So many people want to keep the money away from the eye of the government. They prefer to go to cooperative banks.
Plus they provide higher interest. So that is one attraction. The other attraction is you are able to.
That is why the return is high. Anyhow, both are adding to a return. So risk is much higher. That only I am saying. This is a very simple thing we must run. But we all go for higher return. And when risk manifests, then you blame the regulator, government, policy maker, Mr. Nirupam, all these people, Mr. Chakrabarty.
All the promoters of chit fund are going to jail now. Investment gone.
Yeah. This is a question for Mr. Krishnamurthy. See, we know that a number of companies indulge in financial engineering, either for siphoning out money for the promoters or to show the company in good light so that the valuations go up. Now, I think Moneylife has published a number of articles on this subject. But then, beyond that, I mean, what is the remedy? Because a retail investor or a normal investor, I don't think can take it to the next level to nail the promoter. SEBI doesn't have the time for all this. Ministry of Corporate Affairs, I don't know whether they can start an investigation based on this subject. Yeah. So I was just wondering whether the funds which are there lying in the investor protection cell, which is only used for investor education, why can't they set up a separate sort of a body which takes care of investor issues, because SEBI can't take care of that, what we have seen in the past so many years. And like I said, Department of Company Affairs may not be in a position to take care of each of these issues.
No, I totally agree with you that the present system of investor education protection is totally inadequate, and different agencies are being entrusted with some of the issues related to that. So investor education fund has to be a comprehensive setup which should take up, though we have banking ombudsman, etc., to deal with some of the issues relating to the banking. But there are a whole lot of issues relating to non-banking companies. So my own feeling is investor protection. I mean, money is being spent probably for investor education, but not for protection. So it is absolutely necessary for a review of the existing system, and investor protection has to be done by. In fact, I was suggesting in the meeting that we should sponsor some research studies, surveys to find out why most of the investors are not being protected, particularly the small investors. So it is necessary to have a fresh thinking on this. The existing system doesn't seem to be adequate.
And just one more point, especially when you have found out that there is some ill doing as far as the financial, accounting is concerned. Can't there be some way of doing investigative audit called by the non-promoter investors? That sort of a provision that sort of a provision be brought into the Companies Act.
Under the Companies Act now, there is a system of inspection on the basis of complaints received. We also take suo motu inspection for cases where we feel once in 3 or 4 years we must rotate and inspect the company. But the existing inspection machinery is absolutely incompetent. They may bring out a study report after 3 years or 1 year, by which time the problem would have the company would have even folded up. Now, for example, take the case of Satyam. This is my argument. In the case of Satyam, there was a financial irregularity. How is it that the government replaced the management, took over the company, protected the employees, but we have hundreds and hundreds of Satyam companies in liquidation languishing? Why should, for example, Kingfisher, so many jobs could have been preserved, so many airlines could have, airplanes could have been protected if the government had taken over the company, change the management, run the company, at least ensure that in future it doesn't go wrong. So what is happening is there's a selective, rehabilitation of companies. For example, in Malaysia and Singapore, they have a corporate restructuring authority. They are given full powers. We have something called VAFR, which is a total failure. But on the other hand, it only makes the same companies more sick. They don't allow them to be restructured. So the restructuring authority, corporate restructuring authority, has to be set up. They ensure the companies function, companies die. What is happening today is companies are allowed to die, or even encouraged to die, and not nurtured to nurse them back.
My question is to Siddharth. It is about the future payment system. Basically, the IMPS and the NFC communication that showed a lot of promises for payments, like small time vendors, micro payments, but it's still not going anywhere. So where do you see that happening?
I think this is working? Yeah. Okay. So let's look at the good side first, right? India possibly has one of the best interbank payment systems in the world. Even in the United States, you can't pay a person in real time using the banking system. You can do it using PayPal now. And the charge at PayPal is 3%, right? So, as with all fledgling systems, there are teething problems. And with IMPS, the teething trouble is in the way the payment system is conceived. And you're starting to see solutions. For example, earlier when you wanted to make an IMPS payment from one bank to another, you needed MMID and other such stuff. Now you can do that using bank account and your IFSC code, right? You can make an account-to-account payment using the IMPS rails. So increasingly, I think with a few more steps of process innovation, we should be there where we can make transparent, single point, instant IMPS payments. So I think that it's really good what the NPCI has done with the IMPS.
The bad stuff.
You still haven't said us the bad stuff.
Well, the bad stuff is that, maybe it would have been thought through
a little better. Usability of IMPS is really poor, right? And IMPS is aware of that. So,
where do you see mobile payment systems in this? Is going to be a big leap, or are we going to sort of go from the clutches of the banks to the clutches of another set of cartel called the telecom companies?
Well, luckily, I think with the upcoming proposed regulations, payments will not at all be a monopoly of telecom companies, right? And we already see that the payment landscape in India is pretty diverse, quite aggressive. I think there is a more fundamental issue with payments and going from money to digital payments. The point of digital payments is convenience, right? And the cost of handling cash. And so at some level it's about having easy access to your money digitally while preserving security. So, minimizing risk. Now, there is no centralized risk infrastructure via which you can manage all your money. So, every point of contact, whether it's a credit, debit, bank account, every individual method of accessing your funds has its own risk management infrastructure, often provided by the issuer. Which essentially means you are replacing a system which is easy. You take out cash, draw it from an ATM, give it to a person, done. Right? With a system now you have to remember 7 passwords for all your 7 systems. You have to operate on the mobile device over a very, ineffective data network. So these are issues, right? So how do you go from
disaggregated?
Yeah, so disaggregated, unified, while at the same time providing security both for the person accessing the funds and the institution dispensing the funds. And this needs a round of innovation, right? One of those things that I think payments companies are trying to solve is how do you provide banks and customers the assurance that risk is limited while being able to provide this access to money. And there are several ways of doing that. This is probably not the place to go into individual ways, but it's possible. And we are all working, those who are in the payment space. The second obviously is data and patchiness of data and how do you solve that technically. And the third bigger one is the cost of transaction, right? So today the cost of making a digital transaction, which should arguably be close to zero, is about 2%. Right? It sounds like a scam, right? Where literally instantaneously moving bits from one point to another, it's a pointer, costs next to nothing to do it. So why am I paying 2%? Is it convenience? And at what point I pay 1,000 rupees and I pay to pay 1,000 rupees. I pay 20 rupees to pay 1,000 rupees. Doesn't sound right. So we need to solve these 3 set of problems. The high cost of what is supposed to be a low cost medium, access and convenience, and the network, right? The network. Let me finish. One more thing. Then there is this whole slew of going away from legacy technologies to the future. So let's take Bitcoin. It's an interesting example, not necessarily for what you see on the surface of it. Underlying Bitcoin is something called a cryptocurrency protocol, which essentially says that there is a source, there is a sink. There is point A, there is point B. Point A is identified, point B is identified. And you can move money from point A to point B on a public infrastructure securely. Right? It is completely transparent. Every transaction ever done is present, is shown, and cannot be obliterated, cannot be changed. On Bitcoin, in the cryptocurrency protocol, as it is conceived in Bitcoin, point A and point B, the identities are conceived. And so what happens is that point A and point B are anonymous, so they allow you anonymous cash transfer. With it comes risk. So for example, if somebody can break into point A's wallet and take away Bitcoin, it's gone. So if you combine some of the features of the traditional financial system with something that is upcoming and which possibly dispenses with a lot of the legacy issues that we have with electronic banking. We have a system for the future. The question is, will our payment system transition from where we are today and go to that? And I think some of the industry leaders, I'm sorry, I just keep sort of losing this, that we will over the next coming years try to deal with these things. And we've got to see how effective we are going to be. I don't know, I mean, that was a very long-winded answer, but...
I want to ask you, Dr. Chakrabarty, if you can respond to it, because RBI took the stand that bitcoins are not safe. So
We talked about the infrastructure building in the Bitcoin, not just the Bitcoin.
But I'm just asking whether this whole new system
And also
will again suffer from regulatory inaction, for want of a better word, because I think everywhere we have lots of rules, but the regulators don't act, which is why consumers suffer. So if you go to a new payment system which nobody understands, and we have with kids working on technology which is completely beyond us, everything moves at the speed of lightning except the regulator, then what happens?
See, look, the answer is pretty simple. What is the logic which says you should not do a job or you should not do a business the risk which you don't understand? That's the basic principle. Now, if Reserve Bank, not only Reserve Bank, many central banks, except 1 or 2 or 3, they have said that they don't allow the Bitcoin because we must understand what this business is. And if we don't understand, we will not allow that business to happen. And same thing, what I say, any person, if he is trying to do some job, some financial investment, he must understand that business. Anybody wants to do the business. So that is the basic principle of regulation. I am not here trying to protect the regulation. The reason is that we don't understand. That does not mean we will not do the Bitcoin. If we understand this business, understand the risk of doing business, and we know how to regulate it, then we may allow that. And I think my own view was that we must encourage the Bitcoin, because this is one area we have the IT resources. Maybe we are not having generated the dollar, we are at $1, we have to pay 60 rupees, we will have to generate more Bitcoin. But then we have to understand the risk and how to do that. The second thing, you see, look, regulators are never smart. And you see, let me be very clear. You see, look, regulation is the next stage. If there is a demand of a product and somebody can supply that product, market will automatically develop. It may be a grey market. And once that market starts developing, then the government, you see, that is the parliament, it becomes little bit worried. They then create a regulation. And then regulators come to try to control. So there is nothing you say that, you see, marketplace will be always one step ahead of the regulation, and that is the history of innovation. And let me say that there is very thin line of demarcation between what is called the innovation and what is called violation. What the regulator call it violation, marketplace call it innovation.
Good evening, sir. My name is Mahesh. I come from technology domain. 2-3 points. Chakrabarty sir, I presume RBI is supposed to be an independent regulator, and Finance Ministry is a pure government body who is supposed to protect common man. And it's very surprising both these big bodies allow so-called licensed bank to charge everything. Okay, just today I read Business World, public banks have earned more than 39,000 crores on service charges, private banks have earned around 18,000 and cooperative 6,000 crores. Why such ideas, very simple ideas which you have, that as a common man I can't understand why should my check bounce or sort of if not cleared should not be penalized to the bank. You know the business. You have to help us to protect. That's one question. Second thing to Flipkart, Sandeep Das sir, coming from IT industry, 98, 99, 2000 sir, .com bust in US. We are seeing that happening here, yes or no? Huge valuations, huge money. I can't believe future is much smaller than Flipkart. Some light has to be thrown there. And lastly, with regards to Bitcoin, sir, our good friends in US, with politics, with business, with banks, ruined the whole world. Hence, these engineers have devised Bitcoin to beat all politicians, finance as well as banks. Common man's money has gone in US. But only problem with Bitcoin is who regulates it fundamentally and what are the controls. It is nationless, boundaryless, controlless. That's the danger. And certain basic financial, like if I lose the money, basic financial loss of money protection and all that things are missing in that whole idea. These are my thoughts. Thank you.
You see, first point was very simple. I think you see, look, one of the good thing of the banking regulator is, financial sector regulator is across the globe. They don't regulate the prices. In all other regulation, the price is regulated. Energy regulator, they regulate the prices. Now, whether this is right or wrong, I don't know. But that is what. An unfortunate fact is that when you are regulating the prices, that the demand was that you must deregulate the prices. The Reserve Bank should not decide the exchange rate. Reserve Bank should not decide the interest rate. This is the thing. Now, once it is deregulated, it is between the market players. Nobody decides at what rate the potato is to be sold in the defined market at what place. It is the buyer and seller that decide among themselves. Now, they are also common people are there. They are also rich people are also doing that. So, this is a system as a whole. If we collectively feel that banking regulators should start determining the prices, you have to put a demand. And that is what then the law is to be amended. Parliament must say that banking regulator must also decide the prices. I have no problem. So that is the thing. If regulator is not deciding the prices, we cannot say we must intervene in that. But then one good thing, good news for you. Across the globe, a greater realization is coming. One of the reasons for the financial stability to maintain is the consumer protection. And consumer protection is gaining momentum. It is a G20 agenda, and many where they feel that financial sector regulators will be not able to protect the interest of the consumer. And that is what we call twin peak regulation is coming, a separate regulator to protect the interest of the financial sector consumer. This is what is happening. If this happens, I think the government is always for common man. At least they say that we are for the common man. You see, and they have a vested interest in the common man. So I think some of these problems can be will be resolved. But as of today in our structure, regulator has very little role to determine the price. You have decided to pay the price, and now you should not feel bad. Otherwise, don't avail the service. That's what the position is. But it is undergoing a change in terms of the twin peak regulation. Other thing I have forgotten, because if the question becomes
other things related to Can I add something before you respond to him? So basically, this online business, online shopping is growing in India. My wife is very much, she has become very habitual of all these things. Every time she goes to this Amazon or Flipkart, I don't understand how it is possible to give such a huge discount on each and every product. I really want to understand it. Why this kind of discount? Whether it is just to lure the consumer or exactly what is your business model. Second point, I would like to understand about the sales tax component. You are doing a business in my state, and if the state governments are charging or levying sales tax on you, how comfortable you are, whether you are, because I've heard about Karnataka government that some online company was having some sort of dispute over Amazon. So that aspect has to be clarified, because all the retailers are giving sales tax to the state government. If the retailing business, physically retailing business is going to be taken over by you, that where is the state government going to get its own sales tax revenue? These two aspects I would like to understand.
Dr. Chakrabarty answered what part of it, innovation and violation.
Well, first a disclaimer that I don't represent Flipkart when I sit here. Right? I represent myself. And I can't, and nothing I say here is with reference to Flipkart, rather e-commerce in general. So let me in that context try to address a few of the questions. Right? Let's start with tax, because that's a matter of serious concern for state revenues, especially when the volumes start to be as staggering, right? So let's look at where this has happened for many, many years. The United States, Amazon, has been in business for 20 years. Initially, Amazon, no states charged any, they didn't have any regulatory provisions to charge this tax. Today, a number of states in the US actually charge state taxes. So depending on your destination, shipping address, you pay an additional fee, right? So I think if we look abroad, and I don't know if that's the right precedent, the right comparison, there clearly is an emerging precedent that e-commerce is no different than any other commerce, right? Now, I don't know, for example, I'm not an expert about local taxation, so I don't know the basis on which states charge tax. Is it because of consumption? Is it because of state provides public infrastructure to companies? I don't know, right? Right. So whatever be the basis, if that basis is applied equitably, I suppose one can arrive at a reasonable solution on that. So
right
that's
now
all. They're not paying any additional sales tax. So let's go. I mean, my expertise on this subject ends right here, so I shouldn't say.
They're not at all.
You can decide it is around the corner. No,
So,
they are not paying tax to the states where the sales is going to take place. Shipping
Yeah,
they are not charging it. In Karnataka, they charge 4% VAT. In Maharashtra, it is 12%. That's why they give the billing address of Karnataka. The company's billing address is from Karnataka. The shipping address will be.
okay.
You see, many of this problem and the GST will be settled. That's the basic.
But e-shopping is going to come under GST?
Yeah, at least tax variation will be not there. So there is nothing I know.
We are not talking about tax variation.
We're talking about tax avoidance, right?
We are talking about tax avoidance.
No, I'm saying e-shopping is not the issue. Sale is the issue. E is the medium through which the sale is taken place. So tax remains valid there. It is not that in whatever medium you are selling, the tax remains valid. It is that somebody is selling the product, somebody.
It used to be a matter of jurisdiction, right? If a business is originating out
there. Tax has to be paid. I don't think he is denying that tax is not to be paid. He said we must decide where the tax will be paid, and that should be what is the formula of paying the tax. That's not it. I don't think there is nowhere anybody will be able to argue that no, if the tax is not to be paid.
If there is commerce,
globally, there is very thin line of demarcation between the tax planning and tax avoidance. What the government says the tax avoidance, the chartered account says tax consultants call this the tax planning. That's not it. So more we do the planning, more we do the tax avoidance.
Okay, so there are several questions here. One, with your question about discounts. I think that's a business decision, right? I mean, how people... Now, this is sort of new to India, to provide discounts to gain market share, traction. Think of it as a marketing expense. You can spend lots of money on advertisements. You can spend money by giving incentives to customers to take your product. Now, it sounds counterintuitive to be paid to buy, or to pay to have to pay. So I'm giving you money, then I pay a convenience charge to have to give you money. But I guess this is the new world, right? And I don't necessarily think it is easily explicable in terms of historical precedent. But what is interesting is this, that private investors are putting in large amounts of money, passing on discounts to customers, building up huge valuations. That's their business, no problem. But to what end? Ultimately, there will be an IPO, there will be an exit event, which is what everybody is waiting for. And we only have to look as far back as SKS to see what happened to investors who put money in the run-up to the IPO, or at the IPO rather. And that's something that a mature regulator must worry about, that what happens when mega-valued companies go public? Some people are able to exit. Does the public investor suffer? So I think it's a question at that level. Otherwise, it's really not a problem. You got money, you put in money, you get market share, you build volumes, you build a business. All fair. Is anybody being taken for a ride? Clearly, right now, no. Public is winning. People are competing. Public is getting discounts on goods. But is there a future cost to it? I'm not sure I have an answer.
No, the only on the tax issue, but I happen to be from the tax department, income tax department. There is a practice that wherever tax is less, they will cite the location of earning income to that point of time. Similarly, as far as the sales is concerned, I'm sure they will choose a place where the tax is minimum. And unless and until tax is imposed at the source, you will have this problem. But unfortunately or fortunately, we have a federal setup. Each state has its own laws. So that's where the problem comes. Whether the CST will bring some kind of a
regulation on this, I really don't know. Now, as far as the practice of giving discount, I'm sure they are enjoying the benefit of the economies of scale. The seller gets it at a cheaper rate, and as he rightly said, it is one method of marketing. Instead of spending money on the advertisement, you do it this way, or you get the benefit of discount and pass it on to the consumers initially. I am sure over a period of time, this discount will gradually reduce once the market share is established.
Hello, sir. A simple tax formula is charge 2% each how on the manufacturer, on the distributor, on the retailer, on the dealer, and pass Bitcoins. Bitcoin is very simple. The check is that there are 6 digits. Individual code, the customer's code. Within 1 minute you can pass that check. The withdrawal slip and code 8.
I have a suggestion. In fact, it has come in Economic Times earlier. I have said no donation should be, I hope you won't mistake me, no donation should be given to any political party. That if anybody wants to give donation, it should go to a national election fund. And it should have 100% tax exemption. Now only 50% tax exemption is available. And the entire amount collected from companies, individuals, all that should be pooled in the national election fund. And that should be used for spending on the elections. It can be distributed to various candidates on the basis of a guideline to be formulated in consultation with all the political parties. In fact, the nexus between the corporates and the political parties has resulted in huge corruption in this country. If that is to be removed, the donation of companies and individuals to political parties must be banned. And as far as the election expenditure is concerned, it should be only from the National Election Fund, which of course if there is a shortage, the government has to make good. But no party or individual should be allowed to spend on the elections. Only then, if you can bring about this regulation, there will be certainly a cleaner system of elections in this country.
It's a very old idea. It was mooted by Mr. Advani, and BJP is very much in the interest of state-sponsored election. We don't have any problem if BJP is in the power in Delhi right now and having huge mandate. If they want to introduce state-sponsored election, we don't have any problem. I'm telling this on behalf of my party because we have debated this in our party forum. We don't have any problem, but it will be very difficult to manage. For example, Congress party, BJP, these two major parties, their candidate will be getting bigger donation or bigger share of the expenditure. The smaller parties, RPI, Athole purege Dalit par anyay ho gaya, because the smaller party will get lesser expenditure share. So I don't think it's very good idea. It's very difficult to implement in our country. But no problem. If this is the way to curb corruption or check black money or the transaction which is illegal, no problem in it. We will be supporting it. If you want, you can forward this idea to the new government.
He has already given.
Yeah, but it has been debated for a long time now.
On black money, there are a lot of talks about bringing back black money. For his information, at least, if not, it's only a guess by me, 50% of the black money has already been converted into white money. Whenever the money goes, in the form of land acquisition or in the form of some assets like gold and things like that. But many people seem to think, particularly our political parties, I will not mention individual names, political parties seem to think that the money is lying in the bank for it to come back. Even if it is there in the bank, some of it has already been converted. And in the case of black money, one point you should bear it in mind is, you cannot bring it back, but you can tax it. How to tax it is the question. There are many methods. Adi Nariman has suggested one, where he said you nationalize the entire foreign account, a law, and then tax it. If anybody comes to claim, tax it. Otherwise, take it to the government straight away. So there are many methods, but black money, at least 50% of it has already been converted into some other form.
problem of black money is not just about tax avoidance, right? It's also about theft. That a lot of this money is just completely unaccounted for money. It is graft. It is payoffs.
Accounted and unaccounted. Accounted means as tax has been paid as an income.
No, so to acquire, let's say, a defense contract, is it okay to
You're talking about corruption then.
Yeah,
You're talking
so
about
a lot of black money is about
the corruption money is not taxed. That's all. You tax it automatically.
Is that the only problem with black money, though? That
No, I'm not saying it's the only
yeah.
problem. All that I'm saying is the feature of, the characteristic of black money is that it tends to convert itself into white at some point of time. Now the question is, how much has the nation lost? Should we collect the tax or not? In the case of converted items, it will be very difficult to collect. In the case of non-converted black money, yes, you can tax.
I tax some personal accounts of people. This not one from 4, 1, 2, 3, 4, 1, 2. Whatever account, the account share in the bank, that day you tax that and have income tax on that, then the chicken will stop.
You know the suggestions for tax reforms, but there are practical difficulties. There are many suggestions for the tax reforms. I can talk for it for about an hour. For example, interest payment made by companies and interest payment by banks. Many of them are Binami bank accounts. Binami accounts. I won't say banks, Binami accounts. The best thing is have a flat tax, collect it for the bank, and they make the bank pay the amount 10% of like the dividend thing. Pay certain amount 10% or 15%. You will get more revenue from that than from asking individual taxpayer to file it in his income tax return. It is very easy to introduce a flat tax.
I have another question for you.
Final tax, that is. It should not be again included in the income.
I have one question for you. As a past election commissioner, it was a good step that the politicians had to declare their assets. But then it just ends at that. I don't think any question is asked when the assets shoot up hugely between one point of time and another point of time. Even for the last elections, we have seen some of the people have multiplied their assets 2 or 3 times. Many of them. Yes. But why is it that they are not asked to explain as to how they were able to multiply?
Okay, I'll answer this. Election Commission's business is to conduct elections. As far as the information in the affidavits are available, they are passed on to the Finance Ministry for taking necessary action. I wrote in 2004, immediately after the election, to the Finance Minister, saying that these must be examined and please let us know the action taken. Actually, no action has been taken as far as I know.
Hello? So the point is, question is being asked. As sir said that whatever information we supply to Election Commission, that is being forwarded to the Finance Minister. Finance Minister has to take a call. Finance Ministry usually work. Now the major problem is one gentleman is declaring his asset to the tune of 9 crore or 10 crore while he was contesting election or filing his nomination. After 6 months of the election, his income is double. Now, who is going to check that? That is the point. Who will refer the case to Finance Ministry now?
At least under the right to information, you can't even ask information because they say it is bilateral because private individuals' income and wealth. So we cannot ask information under the Right to Information Act. So with the result, the secrecy shrouds itself. And unless the department is able to tax it and make it public, this is the amount we have taxed in the case of these affidavits, we have no other choice. You have got to accept the status quo.
are very much aware of it. In fact, we have been suggesting number of changes in this regard. Unfortunately, there is no positive response to this. One of the methods I have suggested now after the retirement, of course, is to whether you should have this national election fund so that no individual or no party should spend money on the elections. It should be the responsibility of the government and the election commission to conduct the elections, and nobody should be allowed to spend. In which case there is an answer to it. I know there are administrative difficulties in implementing, but we have to overcome those difficulties. It is possible to overcome this difficulty, and we can put an end to this obnoxious nexus between the corporates and the political parties.
Mr. Chakrabarty, Mr. Krishnamurthy spoke about corporate debt restructuring. Now, he spoke about Satyam and he spoke about Kingfisher. I think both these RBI is quite aware. Now, what is the current status of so many crores or thousands of crores of rupees in corporate debt restructuring? And Reserve Bank is refusing to give information in the RTI, even when it has gone in appeal.
Let me first make it very easy. Information. Look, Reserve Bank cannot give you any information. We collect the information as a fiduciary capacity. Information owner is the banks, and that information only banks can provide. It is not the job of Reserve Bank to provide the information. And granular information is not available even with Reserve Bank of India. We don't know. But then, how much is the total restructured debt that is disclosed in the balance sheet of the banks? You are aware. Even the major activity-wise, industry-wise, it is available. So that is available. Now, you want that everybody, how much debt is restructured, that is individual information. But total restructured debt is available in that. That's the thing. Yeah.
Oh, the question we had is, I think the case he's talking about is the one where I filed the RTI. It was on Lanco. 9,000 crore.
No, individual case, Reserve Bank will not reply. I am again saying.
We were not asking for data. What we said is that RBI is the regulator. It is a banking regulator. So if something as huge as 9,000 crore is given in corporate debt restructuring, then why is there, all we asked is there even an action on the part of the RBI to investigate what is the basis on which you allowed
yes,
this
that
huge
investigation is there.
They said
you are saying that, but I am not supposed to reply. You are asking for information, not the investigation. Investigation is a view. It is not an information. Please understand, what you are asking for information, that information you ask from the Lanco. Why don't you ask from the Lanco or the bank?
No, I can't ask Lanco because Lanco is a private company and Reserve Bank of India is a regulator. I will obviously ask only the regulator.
I am saying I am keeping the information as a fiduciary capacity.
I don't think you can quote the Reserve Bank.
You see, look, bank can provide. I am saying investigating.
No. We didn't ask what is the outcome of the... We didn't ask that.
But we are
you
unnecessarily. Why are you interested in that? Why are you interested in that?
So
look. Corporate debt restructuring is a accepted financial tool anywhere in the world.
But India has been misused.
That is okay. India is misused. You are saying, industry is saying no, it is used very much. That is a dispute part. You see, that's not the issue. That's the issue. Look. Now you see, look. Please listen to me. Now, if somebody is sick, he has to be given medicine. Now you say that
or we can say he is a terminal patient, he can die.
Let me complete. How many people give the wrong medical certificate? You mean to say in this country nobody is giving the wrong medical certificate? Then should you say that we should stop the sick leave? Now please understand, misuse part is there. Wherever it comes to the notice of the Reserve Bank of India, it takes the action. It is not that action is taken. But more than that, it is the interest of the bank to do that, check that thing. Because ultimately, by corporate debt restructuring, what the bank is gaining? If somebody is sick, in all our country, people who are really sick, they are never given medicine in terms of the corporate debt restructuring. In fact, a substandard asset is never restructured. All standard asset is restructured, and that is the basic regulatory lacuna. That if the account is restructured, it is classified as standard. what I have recommended, the moment account is restructured, classified as substandard, all this problem will disappear. I am not the decision-making authority. I cannot recommend. Now you can ask.
No, I would
suggested that this
I would like to clarify. There are two kinds of restructuring. Corporate debt restructuring is different from corporate restructuring. As far as debt restructuring is concerned, it is a deal between the bank and the individual client. Obviously, you cannot ask the Reserve Bank to give this information. Government can certainly give this information. You can, because the taxpayers' money is involved, government can give this information. But Reserve Bank will not be in a position to give.
Reserve Bank has got a separate corporate restructuring cell. Unless the cell is restructured to public state, the banks can't.
You are all ill-informed. Corporate restructuring cell is an IDBI. It is not the part of Reserve Bank of India. All you are having wrong information. It is a committee of the banks which decide. Reserve Bank is nowhere in the picture.
But then IBA is also a cartel of all banks.
That's okay, but it is not a part of Reserve Bank.
It's not a part of Reserve Bank. God help us then.
All industry bodies are the cartel.
Of course,
all in the FICCI is a cartel. The banks are also should have a cartel. But I don't understand that. What is your objection to that? Everybody can have a even consumers all compete together. I can say Moneylife Foundation is a cartel of the banks.
That is correct.
That is
too damaging, Mr. Dr.
So what I am saying that cartelization is the must in a civilized society, the democratic society. Collectivization. It will be not able to avoid that thing. So there is no use of the word cartel. It is no what I call. It is recognized in this country before 3,000 years. Sangham Saram Gachami, united. Then only we will be safe.
But that's totally anti-consumer.
I am also saying that look, this is consumer saying it and the producer says it is. No, we can fight on that. You will be not able to avoid whether you like or not like, but association, union, cartelization in any democratic society, you will be not able to avoid. That much only say. Rest you can have your own view that whether they are good or they are bad, and we can have ours and our debate. We will be not able to arrive at a conclusion. That's what I am saying.
NPA is the concern of customer also, because State Bank of India 61,000 NPA, Punjab National 18,000 NPA.
All much less figure you are saying.
Two lakh 65,000 is total NPA. More than that, and coming 5 months, it will be increase another 1 lakh.
All agree, you take the question now.
What is the state of consumer? If everybody is taking loan and he's not repaying. Agree.
I have no problem. Look, we have certain things you must understand. Now, NPA is a problem. Non-performing asset is a borrower is a problem, or non-performing incidence is a problem. We must understand the difference. Sickness is the problem. Sick person is never a problem. In our country, we call the sick person is the problem, and doctor who treats the sick person is a problem. First, move away from this fundamental mistake. What we must say that sickness is a problem and it must be addressed. Any civilized society cannot say so. Don't blame the non-performing borrower or the banks who are having non-performing thing. Say that non-performing of the borrower, incidence of non-performing is a problem, and that is because we have a non-performing society. We are collectively responsible for that. That's why you have to.
I have two questions to Dr. Chakrabarty and one Mr. Nirupam. First of all, on the policy front, sir, after YB Reddy, we have not really seen any qualitative measures, from RBI. So, are we saying that RBI's approach towards macroprudential has changed? Because in the past 5 years, it's not as if we have not seen some of the sectors heating up. We have seen abnormal growth in LAB. We have seen abnormal growth in road and power assets where if fuel linkages were not even there. RBI is right now making noise about the unhedged exposure of corporates, but then we are not seeing any capital charges being levied. So has RBI's approach towards the qualitative measures changed? The second question is on the... Okay.
Globally, I think regulation has become more stringent. You see, the macroprudential framework is accepted. The issue is that if credit is not growing, if in our system we say that infrastructure is a major problem, if we say we are a power deficient country and we have a bank-led financial system, I don't think you can blame that in a particular area. Now, it is the banks must do the proper appraisal. Credit is not the issue. Credit expansion is not the issue. Credit expansion is not by equity. That's the problem. There are only debt, only hedge debt. So that's why the problems are different. I'm not going to discuss credit. But it is not that Reserve Bank is doing or not doing. The issue is that during the OIB at this time, what has happened? Only one thing I say that, look, we have not stepped up the crisis because the regulator was very good or somebody is there. You see, look, when a big earthquake comes and if some people survive, only you must say, pray to the God. That's why I say that Indian financial system is safe because of God and Dr. Y. Reddy. He has not some idiot. Don't have any this. Look, the basic problem is we have not faced the crisis because we have never taken the risk. 10% people in this country are not having only access to credit. In USA it is 95%. So our banks are dealing with the creamy layer of the society and they are able to manage their risk, or they take a write-off from the government, or they bring a restructuring for the cartel of the banks. That's why we have not faced the problem. So let us not be too much complacent. Though Reserve Bank people are not very happy about my dispute. That's the only thing.
Sir, the second question is about the cooperative banks. Every week we see notifications on RBI's website about cancellation of licenses for the cooperative banks. But we never ever see RBI giving a full page ad in the local newspapers in the region where that cooperative bank's license is cancelled. So how do you expect the poor or small investors or depositors to be aware that the license of the bank in which they're keeping deposits?
When the license is cancelled, after giving advertisement also, how it will help the depositor?
Sir, it will at least create an awareness.
You see, look, but he is not, anyhow, he will not take the deposit. You see, he cannot do that. So anyway, that is not going to help. He cannot do any business now. Much earlier, you see, look, this is the problem. I said regulators are not very smart. The question is that you must study the balance sheet of the banks. No. Oh, everybody has to publish the balance sheet. It is how that you are a member, then how are you doing the business with the cooperative bank? You demand that thing, and if they don't give, you don't deposit the amount. Those who publish the balance sheet keep the money there. There are another 85 banks available in the country. You don't put the money there. You only go to that bank who does not publish the balance sheet, and you keep the money there only. What's the problem?
No. I'm sorry. Let me raise another issue here. We have.
Let her reply that why you keep the money in the cooperative bank who does not give you the balance sheet also.
If you look at the investor profile of the depositor profile of this bank, I agree that some of the people are lured by the higher interest rate and avoidance of tax. However, there are many small investors. I mean, if you ask maid working in your house where her bank account is, she would name one of the cooperative banks near her basti, or even the Patpedi or such schemes. So I'm talking about these kind of small depositors.
I'm again saying they don't deal in the urban cooperative bank. Their pattern of business, I have seen, even they do it. This is a particular group of people. These are basically community-based banks. What my view is that if you have a problem of the opening a bank account, now our Prime Minister has given Jan-Dhan Yojana. In fact, before 10 years, I said that everybody should be given a bank account. After 10 years, at least the realization has come that everybody must have a bank account, and that is why commercial bank open a bank account. And if you are not able to open a bank account, you can always write to banking ombudsman. We interfere in that thing. That arrangement is there. But what I am saying, that then better keep the money in your house. Give anywhere, but don't give the cooperative bank who is not giving you the balance sheet also. At least you will not get any interest. Here you will be losing even the principal money will be lost.
In the
case of cooperative banks which are not licensed, the law should say that they must specifically indicate whether they are licensed or not. That law can be passed with the state government because cooperative banks function with the state government. So law should be amended to say that license has been obtained or not should be stated at the time when they publish any advertisement.
Sorry, let me just continue with this because very interesting. Let's just take this forward a little bit. It's an issue that we face all the time because every time at Moneylife seminars, people come and tell us there's not enough information in the public domain. And for ordinary people to know the difference, they think a bank is a bank, it's regulated by the RBI. They don't know the difference. Now, one point that I want to make is that the regulator does play a role. You pointed out that some banks didn't even have a license. Now, the BJP government and Moneylife has written this recently, both on the website and I have written it in the magazine, maybe the issue in your hand, that 3,000 crore plus has been paid out. Okay? Include by the government to recapitalize them. No. Urban cooperative banks, if they are not even fully under RBI regulation, they are not regulated, government just pumps in money. What do I tell people who come and attend Moneylife seminars if I tell them, don't put your money in a cooperative bank? How do I know X bank is going to get bailed out and Y is not? Because some people have lost money, some haven't. We have somebody here who is a whistleblower for Bombay Mercantile Cooperative Bank. What did he get for blowing the whistle? He got sacked. Okay? Now, he has pointed out horror stories written to the RBI. They appointed a judge. There's a report from the judge. A former IS officer is heading the bank. There is no action. Now, if the regulator does not act, what do you tell people? How do I tell them, don't put your money in a cooperative bank?
Does the regulator says that it has not acted? You are saying regulator has not acted. That's okay. The regulator don't speak. It is not for public debate. The problem is that, you see, look, but I can tell you one thing. I have cancelled the licenses of 24 cooperative banks. It was decided. But now, if a decision is to revive these banks, and you are putting 3,000 crore money which will not make even net worth positive of this bank. Now, in a system, if you say you don't take the rational decision, then nothing is going to happen. Only what I can tell you, if the rational thing does not happen, your investment decision should not be rational. That much only I can say. That is only advice. Then I don't say you go and put the money in this bank. Look, many of our decisions are not very rational, very logical decisions. That is based on very other factors. You see, that I'm not saying that. These banks should have been closed. They are negative net worth. In fact, you are not supposed to do business, any business without capital. Here you are doing business with other people's money without capital. But that's the problem with that. And that's why I did it out of the 400 banks. 378 banks are ultimately licensed by doing that thing. But that's a different issue altogether. All what I'm saying, at the beginning said the risk which you don't understand, don't do. That's why. Better keep the money in the service will be bad and other things is there, but your money will be much safer. That's what I can advise you. This, how to act, it is your choice. I cannot force you to do that.
Because one of the reasons why regulators have, many of these cooperative banks literally enjoy regulatory immunity for various reasons, and mainly because of the political clout that they have. So do you ever see the political culture changing?
I don't think they have
Political culture changing with regard to cooperative banks operation, I don't think so. Maharashtra is basically pioneer in cooperative sector. So a lot of cooperative banks we are having in our state, whether it's urban or rural. And you have rightly said that most of the politicians are patronizing or they are part of the whole cooperative operation. But RBI has to regulate it. RBI doesn't come under any political pressure. What I would suggest, to responding to your question, earlier question, that Dada, even RBI regulators should be little bit consumer friendly. Nothing wrong in it. TRAI can be consumer friendly. TRAI is a regulator of the telecom sector. Okay, you are regulating telecom company, but at the same time, nothing wrong on the part of TRI in having a sort of coordination or connection with telecom consumers. Similarly, you are the regulator of the banks, but what is wrong in if RBI is having some sort of coordination with the consumer? If you are little bit consumer friendly, then your regulation will be little bit easy, and it will give some fruits. Am I right? So don't challenge. Well, I will not take care of consumer. No, you have to take care of consumer.
What I am telling, but practically it does not. Because RBI's role as a regulator, prudential regulator, is to keeping the banks alive. That's the first job. If a bank fails, then the Reserve Bank governor loses the job. And that's why they have a more vested interest to keep the banks alive. And that is why I said at the beginning, globally, they felt that consumer protection regulation must move away from the Reserve banking regulator. That is what is the tendency. I have no problem. I have tried to that. Yesterday also I gave that. But the system is such, the survival of the bank, keeping the bank alive is more priority for the banking regulator. So I can't do that. These are the facts. Now, I have no problem in saying lip sympathy to consumer protection given by everybody, and I will say that yes, that must be done. But the ground reality is this. That's the thing. I have tried to do that, but with all these things, it is very difficult, sir. That's what only I say. And that is why the right solution is that you move away that regulation to create a separate regulator whose job is only consumer.
Protect the interest of the banking, to protect the interest of the bank depositors. Some 50 years ago, that depository insurance was created. Earlier it was for 10,000. Then somewhere in 65 it was raised to 30,000. And in 85 it was raised to 1 lakh. And from 85 to now, for last 30 years, it is still 1 lakh. So it has not been increased to
We want it to be 1 lakh.
How many people have lost money in the bank deposit? Tell me. Why you want the insurance amount to go up if you are not dying?
We want it to be 1 lakh. I'll tell you about it.
You got a insurance. You require insurance only if you die. If you remain alive, you don't get anything.
No, Mr. Shanbag, we will explain that to you.
Already, the regulation is such that banks are not filling, and that's why you are getting back the entire money back.
Okay, on that note, we close this wonderful session today. Moneylife Foundation is really proud to have the highest number of trustees present today, including Mr. Walter Vieira. Thank you very much, and a big hand to our panel.
If you die at the 40, you require 1 lakh rupees. Now she must be increased 2 lakh. But what is the use if nobody is dying at the age of 40?